Gold markets plunge in the early hours on Wednesday. Before we start, a quick word from our sponsor. This video is brought to you by FXEmpire, the world's leading retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link in the description below. The gold market has gotten hammered during the early hours on Wednesday as we continue to see a lot of sloppy and indecisive trading around the world. Quite frankly, this is a market that buyers will continue to jump into every time it falls, so I'm not overly concerned at this point. The $2,500 level, of course, would attract a certain amount of attention, but we also have to look at the $2,480 level as potential support as well. After all, market memory comes into the picture at that point, and that should then have people looking to pick up cheap gold. A lot of this is driven by US dollar weakness, but at the end of the day, the US dollar can go higher while gold does as well. That's a myth. All you have to do is look at a chart of the entire decade of the 1980s and see that it does, in fact, the correlation breaks down. The central banks out there buying gold will continue to put a floor in it. The geopolitical tensions will, and of course, interest rates dropping will as well. There's also that safety trade, but this is a market that's been so choppy and upward for so long that this just becomes normal behavior. I really don't see anything on this chart that tells me anything other than you should be buying dips. I certainly would not be shorting the gold market. It's far too strong. If you enjoyed the video, give me a thumbs up and subscribe.